we'll do another, okay, pressure's on. We'll do another one of those events, hopefully another 3 months or so. I'm going to try to do them at least every quarter, but see if we can get everybody together. So so I just figured while we're here, you know, maybe take like 45 minutes or an hour and just go through what I would consider just a little bit of high level training stuff, and then I'll open it up to some questions. The first part that I'm going to go over, I get this question probably once a week, and the question is, Mike, how do I introduce you guys as the lender if they're already working with someone, or maybe they're apprehensive because, I don't know, they don't want their credit pulled, you know, I don't know. So there seems to be a bunch of objections there. So I put some stuff on paper. So we're going to talk about that briefly. And then I did a really high level overview of loan programs. So I did conventional, FHA, and VA, and just like a really high level cheat sheet, if you will. You can take it with you, and when you're talking to clients, you can at least have a really, you know, kind of high level understanding of those loan programs when you talk about it. Okay, so good. You guys ready to do this?
Juan's in the room for now.
Thank you. I was just calling people out, trying to get more people to show up.
Juan's over here.
Great. Sorry, I didn't know that. Hi, Juan.
Let me just share my screen here. Give me a second.
Oh, Lee just joined. Awesome. Thank you, Lee, for joining. Oh, we have Jessica also. That's great.
All right, let me just share my screen here. All right. So, and by the way, everyone, I'm going to send this out after we're done. I'll send it out to the group in an email so you guys can hang on to this. All right. And have a place to reference back to.
Come on in.
What up? Come on in. We talked to your guy, Robert, this morning, by the way.
Robert New, whatever his last name is.
Not gonna work here anymore. Yeah, that guy.
Okay.
Sorry, my Office Space reference didn't go anywhere.
Yeah.
Okay. Let me share my screen.
Huh? So either way, but
I love you, like she's so sweet. Oh no.
All right. So as I mentioned, and you know, everyone just stop me if you have questions or if you want to talk through anything. I get, like I said, I try to focus on stuff that I get a lot of questions about, and very often I get, hey, what's the best way to introduce the lender, right? Because people sometimes have objections. So what are the things that would sort of encourage someone to do that? So the first, you know, I'll just tell you what I say, and you guys can choose whatever you want out of this, or, you know, obviously you can use all of it. So first is, one of the value propositions is that there is a relationship between the lender and the realtor. As a buyer, you want that, right? Because it makes the process smoother, and, you know, we're negotiating on your behalf. So for instance, if Kyle is working with Yanni on a deal, you know, Kyle's going to work on the loan application and then figure out exactly what needs to happen to get them qualified. So like him and Yanni are going to talk, and he's going to say, okay, well, geez, maybe in this situation, maybe it's an FHA buyer and they need a couple percent in seller concessions, God forbid, Yanni. But maybe that's just something that we absolutely need. So working together on that and having a relationship where they can go back and forth and figure out the best way to present that, you know, to the seller is in my mind a really big advantage for the buyer. Okay. So that's one thing I'll say. Second thing I'll say is, you know, on-time closings. You guys obviously have worked with folks that, you know, a lot of times lenders and, you know, these big banks or these national lenders sometimes have trouble doing that because they're kind of inefficient. But as you all know, we always hit the closing dates unless there's something totally unforeseen. But, you know, we're in a seller's market here, right? So if the closing date doesn't get met, I've actually had this happen. The seller says, hey, forget you, I'm not extending. I'll sell it for another $20,000 to a new buyer, right? And especially right now, meeting those timelines is really, really, really important. So that's just another value proposition. working with very experienced loan professionals. You know, if a buyer's working with a Quicken or with a, I don't know, a Amerisave or some of these like national folks, even like a BOA or Wells, very often you kind of get what you pay for, right? Like these are fairly, low paid folks that mostly, are in call centers, and they're mostly call center folks, right? So, you just don't get the same quality of loan originator. Lee had a really terrible experience working with another lender, and the buyer ended up losing $10,000 because they miscalculated their income. But that's just sometimes what you got when you work with folks who are inexperienced. Better communication. You guys know how well the communication is. You also know how cannot be fun when you're working with somebody who you don't know, right? I don't probably have to go into that very much, but that's a big selling point. And I tell buyers all the time, look, you may not understand why that's important now, but you will as soon as you sign that contract. But again, that's something that you can certainly reiterate. Nights and weekends availability. I mean, this is certainly this is priceless, right? Because listen, let's be honest, almost every deal you put together on a night or a weekend. So if the buyer's working with, I don't know, a national bank, well, there's a really high likelihood that you're not going to be able to get the information or the pre-approval letter you need when you're putting that deal together. If you have to wait until the next business day, which could be a couple days if it's over a weekend, you probably, holiday. Thank you, Roni. You're probably out of the deal by then, and they probably lost it. Working with a local lender, this is a big one too. I literally just had this happen to me yesterday. I had a listing agent call me and say, hey, Mike, I know you. I got your pre-approval letter and we have a lot of offers. I'm taking your deal because because I know you and because we worked together before and because you're a local lender. All my other offers came from national banks or folks I don't know. So we're gonna take your deal. So again, that doesn't happen all the time. But my point is there is a big competitive advantage when a listing agent gets a pre-approval letter from a local lender, right? I mean, that's just true. You guys as listing agents know that if you get a pre-approval letter from a bank that you've had a bad experience with, probably that one's is going to go to the bottom of the stack. Am I right?
I was just thinking.
Definitely going to the bottom of the stack, Courtney.
Remember the deal that you and I did? They had a Quicken, I think it was a Quicken lender, and I talked them into using you. I was the listing agent.
Yeah.
And the buyer used him.
Yeah. Well, so let me add to that story. So Courtney was the listing agent on a deal, and the buyer came to her with an offer from Quicken. Courtney called me and said, Mike, like, I like this buyer. It's a good offer, but I'm only going to take it if they use you. So I said, okay. So I talked to the buyer, and thank God I did, because we ended up getting that deal done. Quicken told them that they were an hourly employee, and the buyer asked, hey, can I change jobs? And they're like, yeah, change jobs anytime you want. So when they came to me, they were under contract, and literally they left their job. And so they were unemployed. So anyway, I got the deal, and there was already a contract. So I'm like, all right, I'll figure out a way to make this work. But it was harried, to say the least. And I actually had to call her employer, and they had to she had to work a certain amount of hours for the next 2 weeks. And I had to coach her HR department about how to do all that. It was a nightmare. But, again, that's the kind of poor advice you get when someone doesn't really know what they're talking about.
But I also think, to that point, though, the fact that you actually dug in to that to figure all that out says a lot for you guys.
Yes.
Yeah. Well, thank you for the compliment. But yeah, so when you are on a new job, especially when you're hourly, meaning a variable wage, we use the year-to-date earnings because there's no other way to do it. Well, she started her training, so she had only worked like 20 hours the first like 2 weeks. So we only had like 20 hours worth of, hourly wage to use as income. Well, that wasn't enough. So I called her, she worked at like a dentist's office. So I called the dentist. It was like, look, I need her to work 40 hours for the next 2 weeks, or I can't approve her mortgage. So the guy's like, okay, I guess I'll make her work for 40 hours. But like, and so we made it happen. But it was, I mean, that would not have
I
happened.
trust you so
But thank you for bringing that up, because that was a good example of why that would be important. Feedback, questions, thoughts from the group? Anybody?
Well, you're gonna get into like other programs, right?
Yeah, I'm going to talk about loan programs next.
Okay.
Yeah, I also wanted to ask Mike,
Point buyers.
Okay.
sorry,
Go ahead.
sorry, what was Kyle saying? I couldn't hear.
Kyle was asking about loan programs, and I just said that we're going to look at that next.
Okay, cool. I was also hoping that you could give some suggestions to the team about questions they can ask to have some idea of their qualifications, or for example, like when we pass somebody off to you, I would imagine it's helpful if we ask things like about, or maybe you can suggest like about their employment or their credit. Do you want us to ask those types of questions? I mean, should we ask them, have you saved up for a down payment and stuff like that?
I think I'm going to answer those questions in the next part. If I don't,
Okay.
Can you bring it up again?
Yeah, sure.
Okay, cool. And then I just put some like objection and rebuttal stuff together here that I thought might be helpful. So, the buyer, I already have a pre-approval. These are just some things that you can say to maybe overcome that. And again, don't forget, I'm going to send this out to everybody. But I've had many great experiences in which a buyer had an incorrect, pre-approval, or they're put into a loan program that wasn't necessarily the best one for their situation. It's always a good idea to get a second quote as well. So even if you talk to one lender, let us look at it anyway, right? Maybe they get at least the same deal, or maybe even a better deal. It costs them nothing, and they have everything to gain and nothing to lose. So why wouldn't they do that, right? So, and then obviously if they end up going with us, and you got to be able to count on us to be able to convert them at that point, and then you all and we all get the benefit of being able to work together. But getting us that lead in, you got to be able to count on us to do the rest, right? Roni, yeah, go ahead.
I was just to follow back to what we were talking about before, like the introduction part of it.
Yeah.
Would you prefer for us to kind of like either get on a call, email, like what do you think the best course of action once we like, hey, talk to mine, or at least have a conversation with these guys and see what they can do differently? You prefer us to be on the same email together, just to get the conversation going?
Yeah, great question, Roni. His question was, for those who didn't hear it, like how to make the introduction, like what are the what are the mechanics, if you will. So do either a group text or a group email. We're finding that to work the best. And it's like, hey, this is Roni, I'm introducing you to Kyle. I'll let you two take it from here. This person's ready to buy a house next month, and it's their primary residence, and they want a single family home in Delray. I don't know, I'm making that up, right? But like, give us a little bit of detail so we know, and then just in this, example, let Kyle take that and kind of run with that. But you've already talked to them, right? So you've already established that relationship. It's our job to enhance your relationship, not to detract from it. So you guys can obviously count on us to take it from there and to get with them. But you introducing us in a group text format, it seems to be working really well. That's gotten us the highest rate of conversion so far.
And for the 30 days, so it's 30 days with the credit bureau?
Yeah, so I was going to get to that next. This is a moving target here. Folks have said to a lot of you, hey, I don't want my credit to be pulled again. I actually, before I typed this up, I actually reached out to my credit vendor to verify this just last week, because this can be a moving target. So as of this moment in time, there's a 30-day window from when their credit is originally pulled by the first lender to be pulled by another lender where it doesn't impact their scores. I literally just talked to Yanni's client as we were walking in here, and his client had their credit pulled on July like 13th or something by another lender. So he's like, well, but I'm not going to buy till late September, so I'll just wait. So I actually use that as a reason or a way to like push the application. I said, well, listen, your 30 days comes up in like a week or 10 days. So, you know, I kind of talked to him too. So I think they're going to do an application today. But so I said, hey, listen, let's do the application now so it doesn't impact your score. And our credit report is good for 120 days once we pull it. So you're still good for the September closing. So he's like, oh yeah, let's do it. So instead of waiting till, you know, August maybe and potentially losing that buyer, because, you know, it's a kind of an emotional sale, you want to get them in the moment. So that was another way to sort of encourage them to move forward now. And that worked. And they have a call scheduled at 11 o'clock today. Yeah. Any questions on that?
Yeah, I have a question.
Yeah,
So
Yanni.
I was reading after, once it's past the 30 days, if they go ahead and run it, what's that whole situation about only 1 point for the inquiry?
Yeah, so an inquiry is only 1 point in score, right? And typically once, you know, once like 30 or 60 days elapses on the credit, they get that point back. So it's really not like
So every time somebody runs an inquiry, it's always 1 point?
it is.
Hard
Now, if
inquiry.
that's only a hard, soft doesn't have any points, but we always do a hard to do the mortgage application. Yeah. Now, they're just to be clear, like their score could go down more, maybe because of other factors happening on the credit report, but it's only 1 point for the actual pull. Like I had one where a buyer pulled their credit with somebody else, and when I pulled it like 20 days later, it was actually a 15-point difference, but they had a collection show up in that 15 days that wasn't on the old report. Because I had them get it from the other lender, and I actually did a side-by-side comparison. So that changed it, but the actual pull that we did didn't. Okay. Anything else on this?
You said, so it's a moving target, the days change?
No, like over the years that's changed. It used to be 14 and then it went to 21. Now it's 30, but it's at 30 right now.
Okay.
That's all you really need to know.
Question.
Yeah, Yanni.
Not related to this, but.
It's okay.
To the credit process.
Yeah.
So I know obviously when somebody is in the process of purchasing a home, they shouldn't open any account, don't run your credit, this, that. But what about using their current credit cards? I always advise my buyers not to put charges on their credit cards, because if they go above like the 30% or 33% or whatever that is, that could fluctuate their credit score for the next cycle and so on. Would you also recommend them not charging their credit cards and kind of just leaving it the way it is?
Oh, that's a good point.
Yeah. So the question from Yanni was, should we advise buyers not to use their credit cards during the loan process? And the answer is yes. You know, Kyle brought this up a second ago, but we do right before closing, we do a soft credit pull. And that's a requirement of Fannie, Freddie, and Ginnie, the agencies who we sell these loans to, right? Ginnie Mae is who is the agency for FHA. But so we do a soft credit pull, so it doesn't impact their score, but we do a soft credit pull right before closing. It has to be done inside of 10 days of the closing. And if they've increased their balances and their payments gone up, yeah, that factors into their debt to income ratio still. So if they've got a really close or like a really tight debt to income ratio, you know, that could be a problem.
General rule
It will
of
be a
thumb,
problem.
try to reduce as much debt as possible during that time.
Yeah, reduction is always better than so for instance, you know, I had somebody that said, hey Mike, hey, can I buy furniture because I'm like ready to move in and I know we don't close for a week? And I just said, I said no. I'm like look, well, I said you can do anything you want, but if you want my opinion from a mortgage standpoint, and he had low ratios, so it probably wouldn't have mattered. But I just said, look, it's always better for you to wait till you close. And once you sign the paperwork, go ahead and do whatever the heck you want to do. Go shopping after the closing. Schedule it at 9 a.m. and then hit the city furniture after. Yeah.
So what if someone actually has, because a lot of my clients have used their credit card as like revolving money, so they'll, have their Amex or whatever, and they'll pay it at the end of the month.
Yeah.
But if it's the closing is like on the 10th and they use it for their monthly.
That's actually a really great question.
Yeah.
So Roni's question is, what if the buyer has a credit card that's paid monthly, like an Amex, right? Like a business Amex, very often is paid monthly where they pay the full
Hi,
balance.
Daniel. This is Jordana with Find All South Florida Homes.
Hey,
And
Jordan.
I just tried to export. I had 36 leads selected. I exported them and then I trashed them. And the export came through, but there was nobody in the file. The file was empty. So now how do I get back those 36 leads that I trashed?
Jordana, mute yourself.
Thank you.
I can hear it.
Can you?
Bridge to safety.
Or just like, I got it.
Bridget's on it.
And I heard her talking.
Is it all set?
Yeah.
Okay. So, all right. So, sorry about that, guys. So the question from Roni was, if a buyer has like a credit card that they pay every month, how does that impact this? So like a charge card, yeah, where they pay the full balance every month, typically a business card's like that. So the answer is, we don't count that full payment against them. So we don't use that payment towards their ratios as long as they have enough money in their bank accounts to pay it. Right? Okay. So in that case,
they
it's
have
probably
the
a
money,
non-issue.
they're just using the card, and then because that's a lot of people do that.
Right.
Or they use the card throughout the month and then they make the payment.
Right.
So
Right.
I was just wondering, so if you do see the money in there that's substantial to actually cover those charges, you won't use that against them.
That's correct. Yeah. So as long as they've got enough money to pay the balance, we don't charge the payment against them. So that one in particular is relatively inconsequential.
Is that something that we should try to figure out with you and let you know the situation, or?
Yeah, I mean, just, you can let us handle that, but yeah, I mean, we're gonna handle it anyway. But if they ask you, I always just advise, like, if they ask you, just default them to the loan officer, just say, hey, like, call your loan officer and make sure that Okay, any more thoughts on that? I'm trying to keep this right to an hour just to be sensitive to everybody's schedule here. We're about halfway through. Anybody have any thoughts or questions about anything that we've talked about so far? Roni, anything else?
I'm really just in regards to like the financing and everything that's going on, especially when it comes to like FHAs. It's hard to get them approved.
Yeah.
I mean, even as listing agents, like when I look at a cash offer first, conventional, an FHA is probably not that fun.
Yeah.
How do you make an FHA loan stand out or make it better?
Yeah,
Especially in this market where people are around like 10,000 over asking.
Yeah.
10,000 over asking.
Roni's question is, how do you make an FHA loan stand out to a seller?
Scratch my head, scratch my
It's
head.
the FHA buyers that I'm working with right now.
It's more on us to sell it.
Yeah,
Sell the buyer,
what-
but still.
my advice has been to most of them is, try to go after houses that have been on the market for a little bit, right? Like that aren't so competitive that you're getting 20 offers. Now, whether they can find something or not, I don't know. But, I can tell you the majority of the FHA deals that we have in the system right now were that's kind of a situation where there wasn't a lot of demand for the property, or there wasn't tons of offers coming in, because it was days on market were over 10. I mean, right now, I'll be honest with you, you know pretty quickly, right? And so when they made an offer, they were, happy to get an offer, they didn't care if it was FHA or not. So that would be maybe a strategy that you could try. Yeah.
You've seen how I present mine, like my email, and I always like put you on there and say you can reach out to the lender. But I've gotten mine chosen because of that email. They said, you look like you're buttoned up and you know what you're doing. I'm going to choose yours.
Yeah, we'll share that template with the group if you haven't already. But so Courtney sends out a really detailed offer email to the listing agent when the offer is when she presents the offer, excuse me, and she copies in the loan originator. And like, for instance, if it's me, and I think everyone's doing this, but I'll respond and say, hey, yes, I'm happy to answer any questions about the buyer if you have any financing questions. And it just comes across that we're a team, right? We've got our act together, we know what we're doing, and we're on it. And yeah, I mean, you have a high conversion rate, so it's working. So she's going to share that template with the group. I think that would be helpful. So I just did conventional FHA and VA loans. I can answer or I think I did jumbo here at the bottom too, but I can answer some other questions about foreign nationals and a few others if you need me to. Let me take you through this. This is look, guys, I can get incredibly granular on loan programs, right? And this thing could be probably 100 pages long, right? But this is my attempt at just giving you the real basics of how to know what programs what, maybe have an educated conversation with your buyer when you're talking to them in the very beginning, like Jordana mentioned. So let's go through this. So conventional loans, I started with that. Those are the most popular ones at the moment. So currently, the maximum conventional loan amount is $548,250. And every year, by the way, these amounts change, but this is the 2021 maximum loan size. Conventional score has a minimum of 620. They are conventional loans are what I would consider unforgiving on lower credit score as far as interest rates go. So the nature of a conventional loan is that they want good buyers with high credit score and large down payments. That's what the programs were put in place to do, right? So be that as it may, Fannie and Freddie, who are the conventional loan, givers, that's not the right word, but like they will do loans down to 620, but they say, okay, well, hey, we'll do these deals, but we don't really want them, so we're going to price them accordingly, right? And so it's not uncommon to have a much higher rate and potentially points built in to a really low credit score. But if that's what it takes to get the deal done, that's what you got to do. But 680 and above is where you want to be ideally on a conventional loan. And just so you all also know this, every 20 points gets you score improvement. So the same rate improvement, excuse me. So you're going to get the same rate with a 699 score as you will with a 680 score. But once you get to 700, then your rate gets better. Okay. So for instance, I don't know if it was one of yours, Courtney, but a buyer came to me, this was last month, and said, Mike, I got a quote from, I don't know who it was, some other lender. And I pulled their credit and they had a 699 score. And I said, what was the terms you got from the other lender? And they told me, and mine was the exact same. So I said, look, and I ran a credit simulator, which we can do. And I said, hey, by the way, if you pay your credit card down $200, I can get you 1/8% interest rate better. And they were like, okay, no one ever told me that. So they just did it. It took me 3 to 5 days. I updated their score and they got a better interest rate. And it's only 1/8%, but that's for 30 years, guys. That's a lot of money, right? So they were thrilled. Those are just some of those little, kind of ancillary things that we'll do.
The 624 never works on condos though, right? I was told condos you have to get like 680 typically.
So, well, it's all about the full algorithm, meaning it's about risk layers, right? So low credit score is one risk layer, condo is a risk layer, down payment is a risk layer if it's less, right? Or if it's a small amount. You know, not a lot of reserves, meaning assets, that's a risk layer. Gift funds, that's a risk layer. So it's more about like the full picture. But yes, that's a big, that's really starting off, you know, to have a condo and then a 620 score. Those two things already have a couple strikes against you, which likely wouldn't work.
I
But
think, are you more maybe talking about the association themselves approving the client?
No,
with that low
no,
score?
every lender I've spoken to always tells me that in order to get condos qualified, I guess, the credit score needs to be a 680.
yeah, it can hypothetically get done with the 620, but it's difficult. Yeah.
Better off just not-
680 or better is obviously ideal. Yeah. If you put 20% down, you don't have mortgage insurance. I think we all know that, but I put it in here anyway. Something that you may not know, if the borrower does get a loan with mortgage insurance, once their loan, once their LTV gets to 78% or less, LTV meaning loan to value, right? They can call their existing mortgage servicer and they can have them remove the mortgage insurance, right? And they can do it anytime they want. Here's the key. The key is if they pay the balance down to 78%, they remove it automatically. If they get to 78% because of equity,
Appreciation.
yeah, thank you, equity appreciation, the servicer might ask them to get an appraisal to document that they actually have that equity. So it might cost them a couple $100, but they can do it. All right. Okay.
Yeah.
Does that make sense?
Yeah, it's awesome. Now that's only applied to conventional.
Only conventional loans.
That shades for quite a while.
Yeah, we're getting to that next. You're absolutely right. Maximum debt to income ratio is 45%. We can sometimes go to 50 again, based on the full picture of the borrower. Seller concessions can go up to 3%. If they put a really large down payment down, that can go higher, but typically it's 3%. By the way, investment properties, you're limited to 2% concessions. Now, I know that's not a big thing in this market, but as the market changes, that may come back a little bit more, right? But it's maxed at 2% for an investment property. Now, conventional loans are the only loan types where you can potentially get an appraisal waiver. So I put that in there. Likely you have to have at least a 20% down payment, good credit, a good borrower profile. And there is a chance that Fannie or Freddie will give you an appraisal waiver. I get probably, I don't know, 1 out of 7 or 8 buyers that get a waiver, something like that. And all that means is that they're not required to pay for or to get an appraisal for the loan approval, which is great. If that
Can
can
you explain
happen.
to me exactly what a limited review means? And is it 25% down or 30% down to get like a limited review when you buy a condo? How does it work?
Good question. So, so Yanni's question was, how does like a condo approval work as far as full review versus a limited? There's a few nuances to it, okay, but basically, so does everybody know what the difference is between a full and a limited condo review? Maybe I should start there. Do you guys know the difference?
It's just
No?
one
Okay.
looks at like the reserves and like the balances, the other one does not.
Yeah. Yes, actually, right. So a full review means there is this 4-page condo questionnaire that the HOA has to complete. It's very detailed, right? It's, you know, they want to see their P&L, they want to see their balance sheet, that they need to have 10% of reserves set aside. We need, you know, we look at there's
versus renters.
yeah, the investor concentration, things like that. So there's lots of different things that are in that HOA approval that could potentially make your deal not work, right? The limited review is just, you know, as it sounds, it's like a 1.5 page document, and it's really limited. and it only asks very limited questions. And very often there's never an issue with a limited condo review because they don't really ask any of those other things I just talked about. Don't care about budget, don't care about the reserves, don't care about some of the investor concentration stuff. All that stuff goes away. So if you can do a limited condo review versus a full, it's going to give you a much higher percentage to get the deal done. I think, didn't we have that on Manny's deal, or was that somebody else I'm thinking of? Somebody else, right?
How much do you
Anyway.
have to put down?
Yeah.
So in order to do a limited review on an owner occupied property, it's 25% down payment. If it's a second home, it's 30%, right? And investment property is also 30%.
Is that also included in here?
No, but I'll add it before I send it out to everybody.
And foreign buyers, is it 30 or 40% of the put down versus the home?
It's a tough question to answer because it depends on their country of origin. It depends on if they're able to prove income or not from their country of origin. It depends on like
Brazilian.
The good standard.
yeah. It's typically 35%. If Ruben's on the call, I'll have him answer that actually because he does a lot of those. FHA loans, so maximum loan size is lower than a conventional loan. So I just looked up Palm Beach County. Every county is a little different. So I just did Palm Beach because that's right here. So 402,500 is the maximum loan size on an FHA loan for Palm Beach County. The minimum credit score is a 580. However, I would always encourage a 620 score. Here's why. When you approve an FHA buyer below a 620 score, it's now considered a manual underwrite. What a manual underwrite means is there is a whole page worth of additional guidelines that buyer has to meet to get that loan approved. Lower debt to income ratios. There's only a certain amount of like late payments and charge-offs and collections that they can have inside of the last year or two. There's a lot of, they need reserves. They have to show rental, history prior to that. So there's a lot of other things that they have to meet. And very often, look, if you have a 580 score, you have it for a reason. And very often they can't meet these guidelines, right? So what I tell people all the time is, listen, we can approve you with a 580, but to not waste your time or ours, I would much rather like spend a bit of time working on getting your score to 620 than trying to figure out how we get you approved for a manual underwrite, because that can be kind of complex. FHA is much more forgiving on credit score as far as interest rates go. So that's why you're seeing a lot of these FHA buyers, not every time, but a lot of them have, sub 680 scores because the rate's not nearly as high as on a conventional loan. And by the way, we're getting to this next. The mortgage insurance premium for an FHA loan is the same regardless of score or regardless. There's a small change on the LTV. So I'll just say that. So on a 30-year fixed mortgage, it's 0.85% on an FHA loan. If they put 5% down, it's 0.8%. Meaning, if they do a $100,000 loan, it's $80. Sorry, it's $85 a month in mortgage insurance added onto their payment. But contrasting to a conventional loan, if they had a 640 score and they were doing a conventional loan and they're not putting down the 20%, it's like 1.5 or some like crazy factor for the mortgage insurance. Like it's way higher. So not only is the rate higher, but the mortgage insurance is higher, which is why you see all the time these FHA pre-approval letters when we have some lower scores. MIP, MIP is what FHA calls it, and PMI is what a conventional loan calls it. But anyway, it's still mortgage insurance, and FHA has mortgage insurance for the life of the loan. right? So even if the buyer puts 20% down, it doesn't matter. They've got mortgage insurance for the life of the loan. That's one of the downsides to an FHA. Now you could do a refinance into a conventional loan. Look, sometimes buyers just have no choice and they just have to do that. Maximum debt to income ratio is really also much more flexible here, right? So as you saw before, conventional goes to like 45%, maybe 50. FHA goes to 56.99%. So there's a lot more flexibility. So when I talk to you guys about, sometimes we get this negative stigma about an FHA loan, and sometimes a listing agent doesn't like it. It's actually easier to approve an FHA buyer, but it's got a bit of a negative stigma when it comes to listings, but it's actually easier for us. You can do up to a 6% seller concession if you can negotiate that. There is no appraisal waiver option on an FHA loan, and the buyer has to be an owner occupant. It's got to be their primary residence. Okay. Any questions on that? Oops. Okay, VA, this one's fairly self-explanatory, but borrower or spouse must be a veteran. So for instance, I mentioned spouse too, because just recently, I don't know if it was Michelle or Kyle or one of you had a situation where we're doing a VA loan. The buyer's not a veteran, but their deceased spouse was, and the VA benefit is inherited by the spouse.
Wow.
Okay, so a lot of people may not know that, so I wanted to mention that. There's no maximum loan amount on a VA, as long as they've got the entitlement. Once you go over the conventional loan limit of 548, 250, maybe they have to put a little bit more down payment down, but there is no maximum loan amount. VA is just like FHA, where they're very much more forgiving on lower scores as far as interest rates go. You get 100% financing, as you know, no monthly mortgage insurance, and you can go a lot higher on the DTI. Actually, Kyle has a VA pre-approval right now. The buyer has a 75% debt to income ratio, and we're approving them. 75% of their debt, of their monthly income, is being taken up by debt.
I legit asked him like twice.
He's like,
"Are
"Are you sure we can do this?"
But like, it's not gonna. This isn't gonna blow up. He's like, "No, if it's approved eligible, it's good." I'm like, "Okay." VA. So if you have a strong credit profile, and this borrower's got like a 780 score, they were, they had high honors with the VA. They take care of their own, right? And so, they're if they don't think you're a risk, then they're gonna.
Question that is typically in a lot of people's minds when it comes to inspections between FHA or conventional. I was always told that they're a little stricter when it comes to FHA and VA. Is this true, or is it inspected the same? Because I've had some VA deals that I've seen where on the inspection they pointed out certain things where then the seller needed to make those repairs in order for it to be able to go through. Like, how does that work?
I assume by inspection you mean the appraisal.
No,
No,
like the home inspection.
Like termites, for instance, for FHA and stuff like that.
Yeah. So let me just say this. So on a VA loan, and actually I'll add this because that's a good point. On a VA loan, VA requires a termite inspection, whereas no other loan programs do.
And the VA buyer can't pay for it, right?
VA buyer cannot pay for it. Seller has to pay for it, or anybody but the buyer. So that's probably, I don't know if that's what you're referencing, but that's really the only difference. Now on
age makes the difference.
Not to us. Now insurance, yeah. Right. It's talking about the roof age here. Because remember 3
years for FHA or
life expectancy or something like that.
So and just to be clear, we only go by what the appraisal says. We don't send the inspection to underwriting ever. We definitely don't want to do that because the underwriter will rip that thing apart. But so as long as the appraiser says that the roof is in working order and it's not leaking, I mean, that's all they really care about.
Yeah. I would say on.
Now, for insurance purposes, you're right. Like, they're gonna want to have something like that, there's a certain life expectancy left on the roof, or they're not gonna insure it, or maybe the premium is gonna be really high because it's gonna be super risky.
I've had on FHA appraisals specifically, I haven't had this on a VA, but on an FHA appraisal, I've had where there was peeling paint and the house was built before 1978. And so there was a potential of lead paint. And so
Peeling paint's
the
gotta
seller
be
had
fixed.
to address the peeling paint. So they did like a scrape and paint, they paid some handyman to take care of it. And then we sent the appraiser back out for a reinspection and they were like, yep, all set, good to go.
Okay, wait, so,
something like that.
sorry,
yeah,
Mike.
but-
Yeah, Mike, I just wanted to clarify Yanni's point, because I think that comes up a lot. So the inspection does not go to the lender, right? So for FHA deals, I think there is there's an appraisal which confirms that the roof is in working order and right, but the inspection report that the buyer does not go to the lender.
It comes to, well, we typically ask for it so we can get them some insurance quotes, just, as a service, but we don't like upload that to our system. We don't like send it into underwriting. That's not a part of our approval process. No, that has nothing
Right.
to do with the loan approval.
Right, so and then when the appraiser goes out, what's the difference as far as property condition that an appraiser is looking for? Regarding if he's doing an appraisal for an FHA
So on a-
loan
on a
versus a
VA
conventional. Go ahead, sorry.
Yeah, really the only difference on a VA and FHA loan is they're going to inspect the attic. They're going to go up and poke their head in there and make sure it's insulated properly. Conventional loans not going to do that. They're also going to make sure that the water and electric is on when they're there. Many times a conventional appraisal does not require that. So there's a little bit more scrutiny, but not a whole lot. It's not a huge difference, to be honest with you.
Especially anything that affects health and, health and safety,
Right.
habitability, broken glass.
Health and safety is all really they're looking for.
railing, peeling.
Hey, Mike.
Okay.
Mike.
Yeah.
Since when have appraisers ever become home inspectors? How does an appraiser know the age of the roof?
Hey, Anthony, hang on one second. There's some conversation and I can't hear you. Just give me a second.
I've only had it come up maybe once or twice and it was easy fixes, a couple $100 here or there and it's done.
Sorry, Anthony, go ahead.
I said, since when does an appraiser have been a home inspector? Like, when do they jump up on a roof to figure out the age of the roof and whatnot? I mean,
They don't.
They don't. So how, from that point of view, the home inspection report that the buyer doesn't even have to get, that's also an option, right? That nobody has to get a home inspection when they buy a property.
Don't have to.
So a lot of this is just almost judgment calls, right?
Well, again, we don't use the inspection report for any part of the lender approval process, with the exception of on a VA loan, we get a copy of the termite inspection because we have to document that there's no active infestation.
Right.
But that's it. That's the only circumstance. Yeah, Kyle. Just VA loan is the termite, correct?
So I just want to make sure that everyone heard that, because I often hear people, there's like kind of this like myth that with an FHA loan, the property has to be in better condition. And technically it's really not. Things have to be in working order, but the inspection report is not required for any sort of lender approval. I just want to make sure everyone heard that.
Yeah, we just use the appraisal report, not the inspection report for the loan approval.
Cool. Thank you, Mike.
Yeah, of course. And then just to finish up VA, so there's a maximum of 4% seller concessions. There's no appraisal waiver option, and it's got to be your primary residence. Any other thoughts or questions on VA? Jumbo, we'll go up to a loan size of 3 million. Haven't gotten one up that high yet, but hopefully Yanni's got one in the works. Minimum credit score is a 720. So obviously your jumbo loan, right? You're going to be highly, higher scrutinized here. We do have a minimum of a 5% down payment jumbo loan, which most people don't have. Now we do break it up in, into 2 loans, but we do have that. If the borrower puts down the 20%, again, there's no mortgage insurance, limited debt to income ratio. So obviously, again, it's a jumbo, so it's going to be highly scrutinized. For 43% is the maximum debt to income ratio, not 45, 50, or 56.9 or 75 in Kyle's case. So that's going to be a little more scrutinized.
So Mike, I have a question. What are the approximate rates for loans this big?
Mid to high 3s. So they're a little bit higher than conventional, but they're not like crazy.
And it says maximum, but what's the minimum for jumbo loan? Million?
Oh, what's the minimum for a jumbo loan? So 548, 251, meaning once you get over the conventional loan limit, that's when you're into jumbo territory.
Okay.
All right, makes sense.
Mhm.
So seller concessions is limited to 3%. You got to have an appraisal. If your loan amount's over 1.5 million, you need 2 appraisals. And we can do all property types on a jumbo. So I know, well, like I said, so we're at a, I don't even have a watch on. I was like, hey, we're about an hour here.
It's actually been like exactly an hour. We have like 3 minutes until we hit the hour point.
He's like,
Whoa, just my wrist.
Okay, but
Hotel.
what time is it? It wasn't like-
So we're at about an hour here, and I budgeted about an hour, so I want to be respectful for everybody's time. But like, I could have literally talked for hours and hours about loan programs. This was my attempt at just giving everybody like a really high level understanding when you're having your initial conversation with those clients, what to say, when to say it, maybe how to answer some basic questions. Obviously, we love for you to sort of leave the details to us, just to not avoid any confusion. But hopefully that's helpful, and I'll distribute this a little bit later today.
do you have anything on there in regards to like basic loans? How it works?
So I've got a question about bank statement loans. We do offer bank statement loans. I don't have anything on here, but I will get some information on that and send it out. But you need 20% down for sure.
And on the foreign loan, you guys.
Foreign nationals, yeah. I'll talk to Ruben because he pretty much does all those for our team. He's really experienced in those. So I'll talk to Ruben. Are you on the call, Ruben? I know I sent this out late, so you might not be on the call, which is, I don't think he's on here. I'll get with him and have him give us some highlights on those loan programs, and I'll get that sent out. It's good to see Anthony on this call. Nice cameo, bro. Anything else, guys? We had a fun bowling night for those of you that didn't attend. So Lissa,
I can't wait to see the pictures. Bridget apparently has some great video action, I've heard.
we
She
do.
does.
Yeah.
She's pretty cool. Yeah.
Lissa has bowling shoes, just so everyone knows.
Lissa has her own bowling shoes. That's impressive.
For sure.
She's for real.
I'm so sorry I missed it. Unfortunately, I'm under the weather, and I certainly did not, under the circumstances, expose anyone to that. I want to thank you guys, Mike, so much for the event last night and for sponsoring that. That's awesome. And for all the information you gave us today. This was really helpful. I hope that you guys feel informed and feel comfortable as far as speaking to our leads about getting loans and then transferring it over to the specialists. Having good partners is absolutely critical to the process and helping us convert and sell more. So thank you so much.
Welcome.
That's for you. Are you guys going to be hanging around today, Mike? Are you going to be working out of the office? I mean, you're welcome to.
Kyle's going to probably take off in a little bit because he's heading back today, but I don't want to speak for him. He might be here for a little bit, but I'll be here for a while today, probably at least an hour or two. I've got some work to do anyway, so I'm going to do a little bit of work, and then I'm here if people want to ask me questions or talk over loan scenarios or something. Okay.
Yeah, and then you're welcome to set up wherever you need in our office. And that'd be awesome if you were there today and people have questions, they can ask you
Sure.
directly. So
Yeah, you got it.
I'm
I'm
sorry
here.
I'm not there.
You'll be in the office.
You can totally sit in my office if you want to. You're welcome to it.
Thank you. It's very sweet. All right, guys, thanks for everyone being on this call. And if you need me or Kyle or Michelle or Haley, by the way, Haley's on this call. She's going to be added to Slack. So we got one more person just available to answer leads in the moment if and when they come in. Our just so I say this, our motivation for Slack is that, you guys, there's a lot of you, right? And leads can come in at, kind of odd days and hours, which is totally fine, by the way. We encourage that. But we also, sometimes all of us aren't available in those moments, but our intentions are that somebody will be, right? So we had a lead that came in at Sunday at 8 p.m., but somebody answered that. I think it was Michelle who answered that one. But, so my point is using Slack's good because it gets you an immediate, answer, which is what we all need and want, because as we know, the buyers are ready to go in that moment and we don't want them to wait.
So Mike, just to review that process, when we have somebody that needs to talk to somebody, we will message the Slack group, ask who's available, and then introduce that person directly. Is that right?
Yep.
So Mike's available. Okay.
Go to Slack, who's available, whoever responds, then that's when the agent, does a group text with that loan originator and the buyer. And,
Awesome.
And that's working great, by the way.
And all their phone numbers should be in the company Google Doc.
Yeah.
Right?
Yes, all of our phone numbers are in the company Google Doc. Does everybody know how to get there on the Premier team?
If they don't, I will strangle them. I'm just kidding. I'm kidding. I won't strangle you. But if you go to the intranet, which is intranet.premierlistings.com, it's one of the links there. That's where most of the forms are. If you don't know the intranet, please take a look at it.
Cool. And once you do the first intro text, just save that in your phone. I don't have to tell you that. Okay. All right, everybody. Thank you very much. Jordana, sorry not feeling good, but
thank you.
See you when I'm here next time.
Sounds good. Yeah, I expect to see you in 3 months and maybe another bowling event. It sounds like it was quite a hit.
Is there such thing?
I heard Sherry's good too.
We have a
Ping pong table? Oh, we're doing that today. Oh, we're doing that today. Probably better ping pong than bowling.
Yeah, we have a ping pong table and it also converts into a pool table. So enjoy.
Beautiful. All right. See you guys.
Have fun, guys. Bye.
All right. See ya.